Hello everyone, and welcome to our presentation on discussing Black management and capitalism throughout history. We're first going to begin with a summary of the article. So the author of this article is Lila McLeland. She is an author and senior reporter for the Quartz online newspaper. Overall, she has over 15 years experience and has a background of journalism and creative research writing. She completed her degree at Concordia University in Montreal, and she then went on to earn her master's degree from the New School in New York. She primarily writes about leadership, management, and mental health and wellness at work. Many of her articles are specifically about the history of business, psychology behind specific work conditions, the future of management in ever-changing conditions, and specific company affairs research. Next, we're going to focus on the context of the article. The context of the article is that it explores the importance and underrepresentation of Black businesses and leaders in the United States and how impactful many of these leaders' discoveries were and still are in modern-day work environments, such as Black leaders creating innovative management techniques and the theory on how perks and benefits are so important as they increase motivation in a workplace. The focus of this article is how influential Black business leaders in the early 20th century were disadvantaged and widely discredited in the business field. Despite the extreme discrimination they all faced, the article highlights how these figures still managed to impact businesses and economic models, and how modern day is working to address racial disparities and accredit Black business leaders as they should have been accredited a long time ago. The time period covered in this article dates back to the 1800s all the way to present-day 21st century. It discusses major points in time including George Floyd's death in 2020, the golden age of Black businesses in the 1900s, and discusses specific African American business leaders throughout the 1800s and the 1900s. The area of business focus in the article is Black-owned businesses, specifically the field of management, and impactful figures of managers, entrepreneurs, and CEOs. Next, some major issues raised by the author. So one of the major issues raised by the author is the discrimination and economic challenges faced by Black entrepreneurs in the business world. The article thoroughly highlights how Black businesses have always experienced racial inequities and how today's Black leaders are developing new models to withstand segregation and to unerase a previously whitewashed history. Another major issue is how, when examining American history, the impact of Black leaders' work was underrepresented and unrecognized. Capitalism did not work in favor of Black citizens at all, so their work was always overshadowed by similar work of white people. The examples provided in this article prove how important the work of historical Black business leaders was and how it provided valuable solutions to management practices and addressing economic challenges. Now we're going to look further into the arguments presented about the issues. So the main argument presented in regards to the issues in the article is how the author argues that studies and management practices of 20th century Black business leaders provide very valuable and innovative lessons for everyone to use in their current business environments. The article provides great proof that so many Black figures and their work was forgotten about, even though their work focused on persistent response to racism and segregation, which was absolutely needed. By revisiting and acknowledging the work of Black businessmen, companies can strengthen their leadership and efficiency, all while addressing racial inequality. Researchers of the article found that in most curriculum textbooks, all of the management figures that were credited for proposing their views of business were all white. In fact, Charles Clinton Spaulding, who is shown in this picture, who was an African-American businessman, was not recognized or rewarded at all for his innovative management theories of the 8 fundamentals of operations that demanded a leader's attention, but instead, Henry Fayol, a white man, was awarded and praised for his very similar overlapping theories 20 years later. In this modern day and age, people are revisiting the discoveries of Black leaders and giving them the credit that they always deserved. A quote derived from the article reads, "To reform curriculums to account for the comparable eloquence of African traditions is to begin to prepare our students for their roles as citizens of a world of culture, educated through a truly human notion of the humanities." This quote argues that we need to understand the full, non-whitewashed history to create innovative methods to run a business. Proper education involves paying tribute to those who were forgotten or neglected in history, as there is so much we can continue to learn from their work.
So the first connection is evolution of black-owned banks. Now let's talk about the history. So according to the Black Bank Foundation, black-owned banks have long represented a crucial opportunity for economic inclusion. In 1975, the U.S. had more than 50 black-owned banks. However, numbers began to dwindle due to significant economic downturns, including the savings and loan crisis of the 1980s, which we will talk about later, and the Great Recession, which disproportionately affected black communities.
Now let's speak about the savings and loan crisis of the 1980s. So this period was particularly difficult for the nation's savings and loan industry due to rising inflation and interest rates. Many savings and loan institutions found it challenging to stay afloat. The interest rates that they could pay on deposits were set by federal government and were substantially lower than what was available elsewhere. This forced many savers to withdraw funds, and additionally, these institutions primarily issued long-term fixed-rate mortgages, which lost significant value as interest rates rose. This financial strain limited their net worth, setting the stage for significant failures within the sector, which again disproportionately affected minority-owned banks.
Now let's speak about the challenges that black-owned banks face today. So first, there's limited access to capital. Unlike large banks, black-owned banks operate with smaller asset bases, which limits their ability to offer competitive loans and products. Without substantial capital reserves, they often struggle to meet the needs of their communities on an equal footing with mainstream banks. Second, there's high operating costs and regulatory burdens. So regulatory compliance costs have increased post-2008, disproportionately affecting smaller banks, including black-owned institutions. Meeting these requirements while maintaining profitability is constantly a struggle. Third, there's consolidation and market competition. So larger banks and fintech companies dominate the market with tech-driven solutions. The competitive pressure from these larger entities makes it hard for black-owned banks to attract or even retain clients, limiting their growth and reach. Now let's look at their triumphs. So beside these challenges, black-owned banks have made significant strides. First, there's strategic mergers and expanding service areas. So black-owned banks have strategically merged to pool resources and compete with larger institutions. For example, in 2021, City First Bank and Broadway Federal Bank merged to form the largest black-owned bank in the U.S., increasing their impact and reach. Second, there's federal and private investment initiatives. So black-owned banks have benefited from targeted federal and private investments. Programs such as the Treasury Department's Emergency Capital Investment Program and the Community Reinvestment Act have helped bolster minority-owned banks, increasing their capacity to lend and invest in their communities. Corporations like PayPal and Netflix have also made significant contributions, pledging deposits to support black-owned banks. Third, there is community and digital banking focus. To reduce operational costs and broaden their reach, many black-owned banks are focusing on digital banking. Fintech platforms like Greenwood specifically cater to the black community through accessible online banking services, expanding the reach of financial resources. So now let's see what the lessons are for business leaders. So the evolution of black-owned banks offers valuable insights for all business leaders. First is resilience and adaptability. Black-owned banks demonstrate how vital resilience and adaptability are for overcoming systemic barriers. These banks have endured through economic hardships, competition, and regulatory burdens, continuously finding ways to adapt. Second is community engagement and innovation. By focusing on community needs and adopting innovative, cost-effective technology, black-owned banks have maintained relevance. They show that investing in community engagement and strategic alliances is crucial for both social impact and business sustainability. What does this example tell? The main focus of the article was that it revolved around the history of discrediting black business leaders in the field, and it also told us about the progression that has resulted from the black leaders' perseverance to accredit black business leaders. Similarly, black-owned banks have arisen from those such inequalities in history, due to the fact that mainstream banks would often deny financial services to black individuals, and due to their leadership and determination, they chose to take matters into their own hands and open black-owned banks to eliminate such disparities.
There has been much progress made for black entrepreneurs in recent times. However, an issue arises in regard to the barriers that still exist for these entrepreneurs and workers in general. The impact of racism on black entrepreneurship can be seen through funding, as many black entrepreneurs are denied 2 times more loans than white entrepreneurs on average. Racial barriers are things like black-owned businesses facing different experiences which pressure them to grow and change away from their racial identity, which are things like their accent and the way they speak. The ecosystem of support beyond capital is important, as networking and mentorship are key for any entrepreneur, but support like this can be often hard to find for black entrepreneurs. An issue also arises with education, as it is a little bit more limited for black individuals. Equality in entrepreneurship is important, as we've come a long way, but it's important to know that it's not completely finished, and we need to focus on making sure that all entrepreneurs have equal opportunities for each business to succeed.
So, what can other business leaders learn from this recent example? Well, they can identify systematic obstacles. Business executives are finally aware of the difficulties that black entrepreneurs often face, such as restricted access to finance, opportunities, and bank loans. Devoted to inclusive financing, leaders should make it simpler for black entrepreneurs to get loans and investment that they need to grow their enterprises. support, and offer mentorship opportunities. Leaders can help Black entrepreneurs obtain the essential direction and counsel that they need by establishing the mentorship programs that they might not otherwise have access to. Encourage the development of skills and educations. Business executives can design and develop educational programs that will provide the resources that Black entrepreneurs require to succeed. What does this example show us more about our area of focus? The value of inclusive business practices. By using this example, we can show the significance of an inclusive strategy that builds a rich and diverse economy. We must support entrepreneurs from all backgrounds in order to foster innovation and economic fairness. The need for business ecosystems to undergo structural changes. This case also shows that in order to achieve social justice, the economic system must be changed to provide more access to financing, mentorship, and training programs, and of course, to create an environment that encourages the success of all kinds of entrepreneurs.
Next up, we're gonna go into the Silicon Valley Diversity Initiative. Into the introductions, tech giants like Google and Facebook have faced significant criticisms for their lack of diversity, particularly concerning about the representation of Black employees. This criticism has spurred these companies to launch various initiatives aimed at addressing these disparities and fostering a more inclusive workforce, which are recruitment, mentorship, and inclusions. When it comes to the challenge, first things is resistance to change. Organizational inertia and established culture norms make it difficult to implement diversity initiative effectively, and many employees and leaders may resist that disrupt the status quo. Secondly is implicit bias. Unconscious prejudices can influence hiring, promotions, and everyday interaction, which is making it hard for minority employees to thrive over success. Thirdly is retentions. Ensuring that diverse hires stay with the companies involved in creating inclusive environment where all employees feel valued and supported. High turnover rates among minority employees often stem from a lack of inclusions and career advancement opportunities. So, what can other business leaders learn from this event? Leader must show a genuine commitment to diversity through actions, not just words. This involves setting clear diversity goals, holding people accountable, and allocating resources to support the initiative. Secondly is comprehensive support systems, which are providing mentorship, professional development opportunities, and support network can help minority employees succeed. This includes creating employee resource group and offering target training programs. Thirdly is fostering an inclusive culture, which are building an inclusive workplace culture requires an ongoing effort to educate employees about unconscious bias, promote open dialogue about diversity issues, and ensuring that all voices are heard and respected. And what does this example show us more about our area of focus? So the first thing is systemic barriers and economic inequity. Historically, Black professionals have faced systemic barriers limiting access to leadership and entrepreneurial opportunities, and Silicon Valley's diversity initiative reflects a recognition of these challenges, addressing underrepresentation and striving to overcome exclusion from network and funding. Secondly, capitalism is an opportunities. So, diversity in Silicon Valley underscore the critical role of access to opportunities in economic success. The initiative aimed at increasing Black representations and recognize that diverse perspectives drive innovations and economic growth, thereby tapping into a broader talent pool essential for longer success. Lastly, is the mentorship and network building. By emphasizing mentorship and support, Silicon Valley initiative parallel the historical efforts of Black managers to create empowering networks. By fostering relationships between the senior leaders and Black employees, these programs promote career advancement and equitable distributions of leadership roles.
So for our fourth connection, we'll be discussing the rise and impact of the MBDA. So what is the MBDA? The United States Department of Commerce established the Minority Business Development Agency in 1969 as civil rights protests arise and economic inequality amongst Black, Hispanic, Asian, and Native minorities became more widely recognized. One example of this is the Black Power movement that happened in the 1960s. So because of minority economic challenges, the MBDA was the first federal agency created particularly to promote the growth and competitiveness of minority-owned businesses. So the purpose of the MBDA was that it was a larger federal program aimed at breaking down institutional barriers to minority company ownership and economic opportunity. In the late 1960s and early 1970s, minorities faced significant challenges in obtaining company loans, government contracts, and entry into industries dominated by huge, mostly white firms. The MBDA was created to level the playing field by providing direct aid, tools, and advocacy to minority company owners, thereby establishing economic autonomy and influence in previously marginalized areas. These photos from the MBDA's official website show how the MBDA aids in development through specific events, one being for trade and the other one being for aspiring entrepreneurs. And in an article from the American Progress, they state that only 2% of minority-owned firms generate over 1% or $1 million yearly, which is significantly smaller compared to non-minority counterparts. And is part of the reason why the MBDA was created. So challenges faced by minority groups. Firstly, they're limited to access to capital. Minority entrepreneurs face challenges in obtaining financing and capital since banks have generally been hesitant to lend minority enterprises due to systemic racism. The majority of minority firms lack the necessary money to seek for bank loans, preventing them from scaling and competing as well. According to an article by the Congressional Research Service, minority-owned firms are denied loans at nearly 3 times the rate of non-minority firms, and they face higher interest rates as well. There's also a lack of networks and mentorships. So growing a successful firm requires network, industry ties, and mentors to provide assistance and connections. Minority business executives frequently do not have access to these networks because of historical and social barriers. Minority entrepreneurs that lack solid networks face additional barriers to connecting clients, obtaining capital, and locating qualified labor as well. The chart from the American Progress shows the wealth gap between the white and the black community. This further shows the relationship between the lack of financing and capital opportunities that minority groups face. So success and failure in overcoming these challenges. Success in overcoming these challenges has been made possible through the MBDA, who has helped minority business owners gain access to federal contracting and offer training to make the government procurement process more transparent for them. There are many entrepreneurs who have used this support to gain access to contracts that they never would have been able to do without. Networking events through the MBDA, such as the Minority Enterprise Development MED Week, have forged crucial bridges between minority-owned enterprises and large corporations or governments. There are also challenges in fully overcoming systemic bias and capital constraints. Despite the MBDA, there are still too many minority-owned companies that are not getting enough funding. This is partially because of racialized lending and racial bias that still exists and still imposes a long-term challenge or threat for minority business owners. So what other business leaders can learn? Networking and mentorships. They can learn to develop strong networks and mentors to get growth access, as partnering in industry connections are like the lifeline to scaling and innovation. An example of this is mentioned in an article by Congressional Research Service, as they state that the MBDA builds partnerships with the EXIM Bank and the Department of Energy to support participation in trade and financing. They can also learn to leverage government tools such as tapping into government resources, grants, and growth and risk mitigation funding that's available. And lastly, they can learn about diversity and leadership in supply chains, such as focusing on leadership and supply chain diversity for innovation and social responsibility for a more innovative firm. So what this example shows about our area of focus. The MBDA is evidence of the importance of targeted aid to minority-owned enterprises and relates directly to the history of black business and management article that we discussed earlier. It also shows that a community-based strategy, perseverance under systemic constraints, and use of strong support networks is the key to sustained business performance, particularly for underrepresented entrepreneurs and firms. It also reminds us that diversity, inclusion, and social accountability aren't just moral values, but they're competitive benefits that create innovation, loyalty, and market differentiation amongst different communities.